Today, I'm focusing on a company called Academy Sports and Outdoors, ticker symbol ASO. I think this stock has a potential return 22%. That's right, 22% on average over the next several years. I'm explaining exactly why in this video. Hey everybody, thanks for joining me today. My name is Justin. I love focusing on stocks and the stock market. I love doing different stock analysis for you guys on this channel, which I'm doing here today. So we're going to talk about, what this company does, their competitive advantage. We're going to be looking at a financial history for this company and then also doing a valuation based on what I think this company is going to do over the next several years, and then try to figure out using a discounted operating earnings model, figure out what the fair price of the stock here is today. And based on what you buy into the stock, whether it's today or in the future, if you're watching this video, I'll tell you what I think the return on investment would be based on the stock price you buy it at the time. All right, so let's just jump right into this video and talk about the company. Okay, so what is Academy Sports and Outdoors? What do they do? What do they sell? Well, they are a retail store, and I bet you could guess what they sell. Sports and outdoor type of equipment and apparel. Here's a couple of snapshots from a couple of their stores. So you can see kind of a sports section here, soccer balls, baseballs, footballs. They sell all kinds of different apparel, shoes, t-shirts, pants, any kind of like athletic type apparel in general. They sell hunting equipment, camping equipment. Their stores are huge. About 70,000 square feet are their stores. So this is not a small, say like a big five, sporting goods store. It is a large type warehouse structure that they have for their stores. They sell all kinds of different very assortment of brands people would recognize, as far as, they have Nike, they have Adidas, they have Under Armour, Yeti, Skechers, Columbia. They sell Traeger grills, Spalding, Schwinn bikes. They sell all kinds of different things, including private label brands. So they have Magellan Outdoors, they have Academy Sports and Outdoors, Marine Raider. So they sell a lot of different, not just private labels, but also leading national brands as well. And they're well positioned within their market space. So they believe that their TAM, so their total addressable market, is around $175 billion. They have a very, very small piece of that pie right now. In fact, the largest company in that space is Dick's Sporting Goods, which only owns about 10% of that total market space. So there is a lot of players within this space. So Academy Sports and Outdoors has a very long runway ahead of it. You can see right now they have about 270 stores in total in this part of the United States. So it's kind of I would say kind of Midwest out to the east and kind of southern part of the United States in general. So they have a long ways to grow. They're only in 18 different states right now. They have 3 different distribution centers, one in Texas, they have another one in Tennessee, they have another one in Georgia. They serve over 30 million customers, and that is growing every single day. All right, let's go and talk about this a little more. So here's kind of their sweet spot, and this is kind of a cool chart rather than investor presentation. So this chart basically is showing you, assortment of products here on this side here, and then kind of value, so kind of like a low cost provider on this side. So for example, if we take a look at, Target here, they have really high value, so good pricing as far as what they offer, but they don't have a really high assortment of like sports and outdoors, right? Where like, for example, like Dick's Sporting Goods, you can see right here on the chart. So they focus on assortment. So they don't have as much value, so their prices are not as good as Academy Sports and Outdoors, but they do offer a good assortment of outdoor products, where you can see Academy Sports and Outdoors is the best of both worlds, and that's kind of their sweet spot, or their really competitive advantage overall. And they focus on assortment, value, and then also experience as well. And one area where they are growing is their omni-channel type segment of their business, and that is their online business. So it's pretty interesting because most of their online business is actually bought within the store. So about 70% of their online purchases that are made are people who are actually in the store themselves, but their online e-commerce business is growing very well in the double digits overall. All right. So here's kind of a cool chart. So this is kind of what management has as far as goals and strategies over the next 3 to 4 years. So they did get a new CEO here in the last few months, and this is what his strategy and what he is aiming for through 2027. So they believe they're going to grow their stores by 50%. So a chart before we saw they had 270 stores. They think those are going to grow another 120 to 140 stores over the next 4 years. They're going to continue to build on their omni-channel business, which is their online e-commerce business, drive existing businesses, leverage and scale their supply chain, and then also provide best team and retail. And they want to grow their business to about $10 billion in revenue. So right now, they're roughly around $6 billion, five to 6 billion, kind of in there, closer to 6 billion. So they think they're going to grow up to 10 billion over the next 4 years, which is about a 10% CAGR on the top line. You believe they're going to get to net income margin around 10%. Right now, it's been around 8 to 9%. Adjusted EBITDA margins around 13.5%. ROIC around 30%, which would be incredible if that was the case. And then also their .com penetration, which is kind of their omni-channel e-commerce, is going to grow 15% plus. So those are the goals. I do think they're fairly aggressive, but I do think that they can hit this based on what I have read and seen so far with this company. Now, as far as current challenges for Academy Sports and Outdoors, and it's a reason why their stock has fallen over the last few months, and this has to go with all retail in general from what I have seen. So retail has been hit pretty hard over the last 2 quarters from shrinkage, from people stealing, and just seeing overall sales in general fall, and that is what's happened with Academy Sports and Outdoors. In fact, if you look over the last quarter, they actually had a drop of comparable sales about 7.5%. This is a company that has been growing double digits over the last few years. So seeing a fall in sales has been very, very concerning overall for investors. So this high growth company, now we're seeing falling on the top line. And we've seen actually a fall in sales the last 2 quarters in a row. Now, I do believe this is short term. I think all retail in general is hurting overall. I think with the high interest rates and with people having less money in general, they don't have the discretionary income like they had before. So they're pulling back. Also, Academy Outdoors and other companies have seen shrinkage in the stores as well. So these are current challenges. I do think we're going to probably see that over the next 2 to 4 quarters. So I don't think this is going to be the end of challenges that they've seen as far as some of their top line growth slow down overall. Now, as far as a stock chart of this company over the last year, ironically, if you would have bought this a year ago, it's almost flat. So they were around $45 a share. Today they're trading around $43. So you bought a year ago, you'd be about flat overall. But you can see it got up to almost $70 a share just back in around May timeframe. So just a few months ago. And you can see just a huge fall off, the gain, and then a fall off here recently as well. And you can see the fall off in both scenarios here and here were right after earnings. All right, so financial history for this company. Now, keep in mind that they were a spinoff of another company, so we can only see since 2020-ish is kind of what we've seen. So it doesn't make sense to look previous to that. So I typically like to look at 10 years worth of information, and unfortunately only have about 3 years based on where the company is at right now. So these are what I call the big 5 numbers. If you follow Phil Town at all, you'll probably recognize those. So it's the sales per share, earnings per share, free cash flow per share, and then book value per share, and then return on invested capital. And so I like to look on a per share basis because that factors in if the company's buying back shares or selling more shares. So I like to take a look at that and see if that's growing or declining. So for example, you may look at a company that's growing the top line revenue, 20% per year, but if they're selling more shares each year too, that 20% may end up being like 5% or 10%. So that's important to me as an investor to really truly know how fast these numbers are growing. So sales per share growth over the last 3 years has grown 10% on average per year. So pretty good. Earnings per share 29%. Free cash flow, which we're going to talk about more here in a second, negative 23%. That looks really bad, but it's not as bad as what it looks, and we'll talk about that here in a second. Book value per share growing 24% per year. That is fantastic. Return on invested capital average 16%. Now, as far as a balance sheet goes, they're actually in pretty good shape. Their debt equity here just in the last 12 months is 101%. I like to see under 100%, preferably under 75%, but they're not far off from that. So I'm not too concerned. Their current ratio is 1.7, which is excellent. So their working capital is pretty good. So I think their balance sheet's in pretty good shape overall. Now, what's interesting is the current market multiple for this company is really low. You're talking around the 7. This is an EV to EBIT ratio, or enterprise value to operating income. So very, very low. The market has not been willing to pay much at all for this company, but the gross margins have been growing. They've been growing around 29% to about 34%. So that is fantastic, and their operating margins have grown from around 8% to about 12%, and they've averaged around 11% over the last few years, which is pretty doggone good for a retailer just in general. Now I want to talk a bit more about free cash flow about this company. So when I look at 2021 specifically, when I saw that free cash flow per share being so high, if we look at this, and if you don't know much about how cash flow works, essentially what it's doing is taking net income. That's what you see up here. So it's $308 million. And it's removing all non-cash adjustments out of that net income. So for example, like total depreciation and amortization, that is actually going to bring down net income, but that's for fixed assets that are being depreciated that they've already paid for. So it's actually not on a cash basis. So we're pulling that back out because it's non-cash on that. So this is one that really jumps out to me right here, and that is change in accounts payable. So you can see it's a $361 million change year over year, and that's what's actually beefing up their free cash flow. And so what I did not dig into this number, I didn't go back and look at their 10K, but what that looks like to me, and what I can assume is that they actually had a lot of accounts payable on their books. So they booked a lot of expenses, but they did not pay the bills. And I don't know why they didn't do that. I don't know if that was just a management decision. Hey, we're going to hold off on paying our accounts payable for a period of time. They're trying to hold cash. I'm not sure, but that's not normal. And that was the year that they did their spinoff. So something's kind of going on there. So I would kind of ignore that from a free cash flow standpoint for that year, because that looks like an oddity year to me overall. All right, so let's go on and talk about valuation for this company. To do that, I am using a discounted operating earnings model. So I'm trying to figure out what revenue is. I'm trying to estimate what I think operating margins are going to be, and then project out what operating earnings is going to be for the company, and then discount it back based on market multiple, but then also a discount rate on top of that. And this is what I'm coming up with overall. So I think they're going to be around $6.2 billion in sales this year. Then it's going to grow to 6.8 next year, 7.5, 8.4, and then 9.4. Now, keep in mind, management wants to hit $10 billion by 2027. I'm not going to say they're at $10 billion. I think they're going to get close to that based on these assumptions. So that's kind of what I'm thinking there. That's about an 8% growth per year on the top line. Management wants to be at 10%. So I'm just kind of bringing that down a little bit. Shares outstanding right now is about 74 and a half. Their net debt is about $1.4 billion. Current share price is actually around $43 to $44 right in there. And then I think operating margins are going to kind of fall like this. So last year they were around 13%. This year I think it's going to be around 11. Next year around 11. I think it's actually going to build back to that 13%, because I do think their gross margins are going to be around that 34 to 35%. And so I think they're going to end at 13%. So that tells me that their operating earnings is going to grow about 8% per year, which is in line with their revenue growth overall. I think the market's going to pay around a 9 for this company. They've been around 7 to 8, but I think if they're going to continue to grow their top line by almost double digits and operating earnings about the same, I think the market should pay at least a 9 multiple for this. And based on that, I get an intrinsic value of $73 for this company, which is a 40% margin of safety, which is absolutely fantastic. Now, these are my assumptions. I could be completely wrong. If you don't know how to value companies, I do offer valuation templates on my Patreon, which I'll put a link down below if you're interested. Now, if you're watching this video in the future and you're wondering, what can I expect on a return based on these assumptions I just went over, here is my projection. So this is how I'm looking at it. If you were to buy the stock at $59, I would think it'd be around a 15% a return on investment, where if you bought the stock at $40, I think it'd be around a 25% return on investment per year over the next several years based on those assumptions I just talked about. And this also assumes revenue is going to grow at 8% on the top line each year. Operating margins are going to be, operating earnings is going to grow around 8%. Per year, and then the market multiple is going to be around a 9. So what the market is willing to pay for this company. So overall, I actually think these are pretty conservative numbers, and I did other valuations on this looking at 10 cap. I looked at Philtown's payback time. All those indicate it's actually a buy right now. All right, everyone. Those are my thoughts on Academy Sports and Outdoors, ticker symbol ASO. Again, these are my personal thoughts, feelings, and assumptions, but it does look like it is very undervalued right now. Like I said at the beginning of this video, based on my assumptions, I think the return on this investment is around 22% based on today's stock price of around $43 to $44. I think there is some really, really excellent runway for this company overall. Right now, they have around 270 stores. They're going to grow between 120 to 140 additional stores over the next about 4 years. The new CEO has projected that revenue is going to grow 10% per year over the next several years, getting to that $10 billion mark by the end of 2027. Pretty aggressive, but I do think they can hit those numbers. Operating margins will be interesting because this company's gross margins have grown from 29 to 34% over the last few years, and their operating margins have grown as well. We've seen them grow from 8% all the way up to 13%. I do think it's going to take a dip this year and into next year, but I think they're going to build back up to that 13% long term. And I think this is a really, really good place to buy in for this company. I am strongly looking at it myself, but always do your own research. And again, if you're interested on how to value companies, I do offer that on my Patreon, which I'll link down below as well. But I would love to hear from you guys. Have you looked into Academy Sports and Outdoors? Do you own the company yourself? What do you think about this company after watching this video and hearing my assumptions on what I think this company is going to do in the near term and potentially in the long term as well? Love to hear you guys from the comment sections. Thank you so much for watching. I'll catch you on the other side. Take care and God bless.